Welcome to the B.F. Anderson Technical Report for July 28th. Ari Wald, he's a technical analyst, confirming basically what I'm saying. He's saying stocks in process of bottoming, market anticipating peak in rates and inflation. Now, this is a very important stage that we are now in. You do not want to be complacent here. You want to be paying attention. You want to focus on some companies that you've wanted to invest in. This could be the time. You want to do some nibbling or just some very light buying at this point. But if you look at this graph, you can see that we are what we were entering, I believe, to be, and this is just my opinion now. I mean, this is an accumulation cycle. And it's very frustrating because an accumulation cycle, the market pulls back, it rallies, it pulls back, it rallies. So it's going to really test your patience. But at least you're not in the downtrend. So it looks like to me the downtrend is pretty much winding up, and we're now going into a bottoming phase. And then you want to be prepared for what we would call the ascension cycle, when we start to see stocks start to ascend. So, I mean, if we look at a long-term chart on the Dow Jones Industrial Average, going back to 1900, you can see where you get into these bear markets, and then you get the down move, then you get the basing action, then you get the ascension. Hopefully, we are getting ready for that moment. This could be somewhat of an opportunity of a lifetime in a way. It is for me. I feel that way. This is the bull-bear ratio. This is where we take the number of bulls in the AAII survey, and we subtract the number of bears. Now, you can see here, we've been waiting for a capitulation in the market, but we kind of, in a way, could argue that we have gotten that. I mean, we've gotten this record reading of around a minus 43. Now, if you go back and look at history and go back to this period here, we got to a similar reading, and then once it got back up to this line, which was around, I want to say about a minus 13, and that's where we are right now. And you can see that's where the market pretty much bottomed. You come here as well. You can see that when we came down to this line, then bounced back to this line, that's where the market made a bottom, and we started the ascension phase. Now, on the indicators that we're using, we are seeing some real improvement here. This is the NASDAQ. This is the 25-day moving average. This is the 50-day moving average. We have now, the index has now come off this base, is starting to ascend, and we're getting a buy signal because the lower moving average has turned up. Same is true for the mid-caps. In fact, the mid-caps really look pretty darn good. I mean, you actually got a breakout above that base yesterday. Here's the New York Stock Exchange. Again, a breakout above the base, lower moving average moving up. There's a buy signal there. Then we have small caps, which are actually doing the best of everything. And this is really a risk-on type of index. So if the small caps are moving, that's a pretty good sign. Here's the S&P 500. You can see the same concept here. We've got the lower moving average turning up. Now, on the I wanted to also mention, though, we have not gotten confirmation from the weekly indicator. Now, realize what we need there is to get the weekly above the 35-week moving average for 2 weeks. This indicator has been highly reliable in the past, and we'll just have to see. But it's kind of a ways to go to get confirmation. Now, on the aggression index, now go back and look at the aggression index. You can see that bottoming phase, then the ascension. Now, this is where we're comparing technology stocks to consumer staples. We've come down, we made a low, rallied, made a lower low. However, we're starting to rally again, and the lower moving average has turned up. So we now have a buy signal on the aggression index. New lows have contracted. We are seeing fewer new lows, which is a good sign as well. Now, on the IPO fund, this is stocks that have gone public within the last couple of years. Still somewhat flattish, but coming off that moving average, is moving up. Like to see it get up around here, around 35. That would be a good sign. Now, on the economic indicators, I think it's really interesting that, everyone's talking about inflation. Well, they're also starting to say that maybe it has peaked, because interest rates are at 2.7. We got up to 3.5. So if inflation was going to continue to be a problem, I cannot really understand how come the 10-year Treasury note is yielding a lower yield. Now, oil prices are coming down. They're in a downtrend as well. Financial stocks are showing some improvement here, some improvement as well. So maybe we are going to have a recession, but it may not be a bad one. Now, also on interest rates, this is the 10-year Treasury yield. Now, you can see here, it kind of shows a pattern here of a head and shoulders. Here's your left shoulder, here's your head, here's your right shoulder. And it's breaking down below the right shoulder. So this is basically saying that interest rates could be heading lower, not higher. This is a corporate bond fund, same scenario. You can see here where corporate bonds have kind of based out, gotten into an uptrend. The bond market is looking much better. And I have said many times in the past that this market is going to have a tough time without the bond market, doing well as well. Now, we've got a trend strength on the NASDAQ of 37.5. That's the highest reading we've had in quite a while. I would say it's been about 16 months that we've had to go through this process. If you think about it, Tesla peaked in February of 21, and that was really the growth cycle itself was peaking. And so it's been about 16 months. So we're seeing a good improvement here in the trend strength. Now, on the S&P, still at 25%, but very close to going to that 37.5. So the S&P is improving as well. Volatility index, the VIX is settling down. We're getting down here to readings of around 24. Would like to get down below 20, and that would be a good sign. Yield curve, we continue to see an inverted yield curve flattening out here at a minus 20.2. This is comparing the 5-year Treasury, the 10-year Treasury note to the 2-year Treasury note. So the yield curve is saying recession. Well, we know now. So now will the market start to discount a recovery? That's the question. Now, again, on the top 5 stocks, well, we want to mention this. The medical stocks are showing quite a bit of relative strength here. This is Lantheus. It's in an uptrend, holding above that 10-day moving average. Stock looks fairly positive. This is coal, Consolidated Industries, Consolidated Energy. And you can see strong uptrend. The coal stocks are actually looking quite good. Here's Celsius Holdings. This is a soft drink or an energy drink company that is out of Boca Raton, Florida. There's a rumor that Pepsi-Cola may take a shot at buying them. Stock has been in a very good uptrend, continues to look strong. This is In-Phase Energy. Now, I need to disclose, we have bought this stock. We actually bought it yesterday. This is a gap up. This is an interesting buy signal. What you do is you take the 50-day moving average of volume. You're looking for an average day for volume over the last 50 days. Well, the 50-day volume is around 2.8 million shares a day. Well, this stock yesterday traded roughly 11 million shares, which is a substantial jump in volume. Plus, the stock gapped up. So they announced earnings. Their revenues have doubled. The company has a return on equity of around 31%. This is a very profitable business. This has to do with renewable energy. This is solar, but they also have these micro inverters that are somewhat revolutionary. Scorpio Tankers, this is, oil tankers, continues to be in a strong uptrend. So all in all, what I'm saying is don't be complacent here. This is a time to be paying attention. If you have any questions, feel free to give me a call. Thank you very much.